new listing as well today, and a good one at that. Let me welcome on board Sunil Suresh, the MD, and Pradeep Mishra, the CFO at Stanley Lifestyle Limited, joining you on the show right now. Gentlemen, both of you, good to have you on the show. Suresh, congratulations firstly on the listing, and clearly organized luxury retail market. It is expected to grow by at almost 26% by 2027. Tell me, what are your growth projections for the next few years then?
So our intention is to double our business in the next 3 to 4 years. I think we have been stably and steadily growing at about 20% year on year, and that's our target, to double our business in the next 4 years.
Right, and currently you have about 62 stores as a 20% CAGR target. Are you set to double that? Can you just give us a sense as to how many new stores you're targeting?
It's major metros, so we are not planning to expand into smaller towns. We will mostly be in the major metros: Delhi, Mumbai, Hyderabad, Pune, Calcutta. That's how we plan to expand. Our intention is not to go into smaller towns because high-end furniture, luxury furniture being big ticket purchase, there is a tendency that many people travel to the nearest metros to do this purchase. So we don't see ourselves expanding into smaller towns. Even if they build homes in such towns, the usual habit is people come to the major metros because they get a bigger choice and selection of furniture, and we want to be present in these metros.
Right. Also, Prashant, the 9-month performance for FY24 has remained subdued for you as compared to what we saw in FY23. What were the factors, and what do you think you're going to clock in for the coming quarters?
What we last year 9 months, what we saw was there was a major delay in the inventory handover, which was coming to sale would have happened, but in terms of handover where customers move into their house, we saw a huge delay in that space, and so that didn't uptick as per what we expected. So that was a major reason for it, and could be it is people are traveling. There was a COVID impact because of which the delays of construction delayed happened, and then handovers got delayed. So there are broad, we are in the tailwind of housing industry. Any changes or delays there will have an impact on us. So this is where my last year 9 months were impacted.
Currently, your revenue is evenly mixed across 3 formats. How do you see the revenue mix going forward?
Yes, so basically, our core business has always been seating. So we continue to kind of expand in the seating business, trying to kind of get a bigger chunk in terms of different categories. While we compete with top global brands, so the raw material has to be of a certain level and certain quality. So thereby we continue to import. But however, I think with scale, we are now getting an opportunity to start localizing it. We are in discussions with certain European joint ventures where they're willing to come and set up facilities to be able to supply us the raw material. For that, scale is required, and that's where we are at this point in time. So as I mentioned, I think we might be a bit import dependent right now in terms of raw material, but the actual plan is to start localizing. We've already localized close to about 25-30%. So our vision is to localize almost 70-80% in the next 3 to 4 years. And in terms of competition, like I said, we actually compete with global brands. So thereby we can't do any kind of a short chase in terms of quality of material.
Right, gentlemen, both of you, thank you so much for taking the time out and speaking with us today, and congratulations on your listing once again. In fact, on that note, we're going to wind it up right here in this edition of First Rates. It's a goodbye from Avan and me.
If you like this video, then like, share and subscribe to ET Now.